Welcome and thanks for stopping by. I'm Coach Craig of Digital Micro Trading, and this is the weekend video. We're going to cover what happened with price action on a higher time frame on the NASDAQ 100 and the S&P 500 on both a weekly and daily, and then we'll go at how those closed. And we want to look at certain markers to reach and look at specifically for the new week. The second part of the video is the top 5 takeaways from 2024 that I go into with 2025 to improve trading profitability. S&P 500 futures micros on the left, micro NASDAQ 100 futures on the right. Weekly chart, high time framing. We are 9:18, less than a little over 10 minutes to go before the New York Open. And where are we for the week? The blue line here is the 3 EMA, and note how the body of the candles are above it. So let's mark that EMA out on the S&Ps. We have 6129.63. So when was the last time we really hit it? Was earlier in the week. We've got this discount candle wick here on the right. On the NASDAQ, same thing. It's marked out at 21,795.16. This is going to be a marker for me on where we close for the week. Since it's Friday before, I'm just marking it right now on where we're sitting. And as far as this candle goes here, so that sets my 3 EMA on alert status. And it doesn't look like any possibility right now that this is going to be hit specifically on the S&P, because we've got a pretty good distance right now on air gap between the body on the discount wick. Okay, it's almost coming in on consequent encroachment on the S&P 500. On the right, however, I would say and argue maybe this is a little higher than the mid on the NASDAQ, but we've still got a green candle, not a black candle, and we've got new all-time highs. No all-time highs on the S&P. That's right now going to answer the first question on the title is, which do you trade? What is your directional bias? If you're looking for more of a two-way opportunity, the S&P 500 has been doing that. Whereas if you look at the last 3 weeks on the NASDAQ, it's just been all green, and specifically the week prior. Look at this huge candle here. This is a very large candle from top to bottom, 21,256 on the candle body to 21,924. Let's get that again. 21,248 by 926. That's just ginormous. And on the S&Ps, you can see here that second candle, not so much. So that's really the tail of the tape for the higher time frame. I'm going to come back around on how the weekly closes at the close to tie up this video. But it's always important on a Friday to see where we begin and end on the highest time frame, which is this weekly. Where we're at on time right now is 9:34, coming on 9:35. Here's the daily chart, and the daily chart really shows a more pronounced difference on the NASDAQ versus the S&P on the left. It's pretty easy to see on the left here that you've got a range consolidation happening. So note this pennant happening, lower highs successively the last 3 days, lower highs and higher lows. So here we are. This Friday candle body is inside of Thursday, which is inside of Wednesday, which was the big CPI. And then Thursday's PPI, which was not great inflation news at the wholesale level, that was a down candle. Let's look at the NASDAQ on the right. If you're a two-way trader and looking for down action, you surely didn't get much of that in the NASDAQ. Answering that question, where should you trade, S&Ps or NASDAQ? If you're a bull, NASDAQ's obviously winning the game here on a higher time frame. So here we are, all-time highs. Look at that candle body right now. We're minutes into the Friday open, New York, and here we are. Note on the 3 EMA on the dailies, there's no real big gap on the left side on the S&P, where on the right, we're 2205 versus 22,110. So that's a good amount of candles. So over 100 candles. And on the left, 6140 versus 6146. So more like watching paint dry on displacement going above or below that 3MA. So that's my marker. Again, let's look at that alert down here where the weekly 3MA is. And again, big gap on the NASDAQ on the daily. That's why I like transposing certain markers from the weekly to the daily and so on. So that concludes the daily, at least for the first few minutes of the RTH Open. Weekly, this is after the close, hours after the close. So hindsight being 2020, reviewing the week. So that way we have some guidance going into the new week. So on the left again, S&P 500, 3 EMA, 6121 here. So we mark that off on the dashed line. Notice the black candle body. Okay, we have a bit of a discount candle wick and a premium smaller candle wick. And the body of the candle on the MES S&P 500 micro futures is basically contained in the previous week. So smaller range, but we're in a premium price above the 3 EMA. That is again 6121. On the right, we've got the NASDAQ E-mini 100 micro futures. And let's note right away on the 21802.41, that is marking here on the 3 EMA where we're at, 21802.41. And note how the candle body expanded into a new high. So that's number one. And number two, we closed at a good gap above. So the S&P on the left, really a much smaller gap above the 3MA where we had a much larger gap. So we closed 22,082 on the March futures on the NASDAQ, and we're down here at 21,802. So what? We're at over 280 points above the 3 EMA on NASDAQ points. So let's go to the daily chart while we keep the alert status on where we closed on the 3 EMA. So here's the daily. On the left, on the S&Ps, you can see two black candles, Thursday, Friday, and Wednesday. This big green one is the CPI release. And note how the candle wick did the damage below Wednesday's candle. The low of the candle wick here, the candle wick here for this day, Wednesday, is 6112.75. And for Friday, the low was 6110.25. The second thing to note here is we closed on S&P 500 futures. S&P 500 futures closed below on the daily 3 EMA, and that comes in at 6130.99. That's the daily 3 EMA, but still above the weekly. So we talked about the weekly already being marked off. But I'm just saying this potentially signals on the S&P 500 a little bit of a shift. Now going to the right on the NASDAQ, we're nowhere near a lower close on Friday. We're green, we're above it. And the daily 3 EMA on the NASDAQ is coming in at 21,993.86. And we have a close on Friday on the daily, of course, 22,082. So again, we're a premium above the EMA where the S&P is at a discount on the daily. Now note these black lines on both charts, the S&P on the left, that's the middle Bollinger Band on the daily, 6094. So that's an equilibrium point. This is another measure. Are we at equilibrium, premium, or discount? And we're still well into a premium, based on the daily Bollinger Band and the middle Bollinger Band, and that's the black line, 6094.5. And here we are on the NASDAQ on the right, 21528.75, middle Bollinger. That's a lot of space. So before we even think about getting to mid Bollinger on the NASDAQ, we've got to get down here at least to break the low of the CPI Wednesday. That is the 11th, and that low comes in at 21,673.25. But I'd just be happy to see if we could even get down to 21,803. We've got a disparity. The markets are not aligned between the S&P 500 and the NASDAQ, and I don't really need to go further than that for the new week. I'm staying on a high time frame basis, and I want to see where we open up. Nobody knows where we're going to open up Monday Globex, so let's see where we open up here on the weekly and the daily higher time frames, and then we'll go from there on the smaller time frames. But what I want to go into right now is what I'm going to take away from 2024 going into 2025. So I have made a list of certain takeaways. So let's go to that. Number one takeaway for 2024 to 2025 is determine the drawn liquidity, higher time frames. So that's the weekly, daily, and 4-hour. Number two, I'm going to trade off the 15-minute, 2-minute, and 1 minute. So I'll toggle between. If I'm looking at the setup on the higher time frame to determine bias, then I'm going to trade off again the lower time frames for the actual entries and exits. The next takeaway, number three, is time of day. London hunting zone 2 to 5 a.m. New York time. In New York, I'm going to do 8:30 a.m. Eastern Standard Time to 11. That's it. 2 times. Statistically, that's my takeaway from 2024 to 25. These are the best times for my trade optimally. Number four, what are the days to avoid on a monthly basis? Number one's got to be CPI. Statistically, if I just walked away and never traded one thing on CPI day, I'd be so much more ahead in 2024. So no more CPIs, except possibly one micro contract on features. That's it. No options, no other amounts. And it's got to be at a certain time of day that I do that. Primarily, that would be at the end of the AM New York session. Options have been the bright news star for me. I've only traded them for 3 months here as we close out 2024, but that's got to be one of my top takeaways of something new that I'm going to improve my trading results. And I don't need a lot of money to do this. I have a separate brokerage account. It's small, and I'm testing out basically on how well I can do options. Primarily, I'm going to buy puts on the S&P 500s, not going to trade the NASDAQ on it because the NASDAQ's not showing any kind of displacement in 2024, and it's outperformed the S&P 500 for the most part, especially in the last quarter of 2024. So again, S&P 500, SPDR, SPY, I'm going to be buying puts at specific times, and then I'm going to keep it real simple. I'm still going to use the futures charts on the higher time frame for bias, lower time frames for trades on when I'm going to do these options. If you've seen the prior videos on my options, as far as duration on buying these puts, I usually like to keep them out from anywhere from 70 to 100 days. Those are my 5 top takeaways from 2024 to 2025. Thanks so much for watching. Aloha to all subscribers, and those of you who have not yet subscribed. Hopefully you find some value in these videos. I try to publish at least 2 videos a week. Thanks again for watching. Aloha and take care.